Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about the top highlight events that are expected to be moving the markets today. And as the title of today's session suggests, we'll be mainly focusing on the Bank of Japan and the expected rate hike this December. So the Bank of Japan might hike rates in December amid soaring bond yields. What does this mean and how should we prepare for this? So as always, remember that these sessions do not constitute of any form of investment advice. They are not a recommendation to trade, so you should always do your own due diligence. So first things first, we'll look at the economic calendar, and as you can see, today it's a little bit thin. So today being the 4th of December on a Thursday, we have quite a number of data coming up, the latest being the unemployment rate in Switzerland, which came in at 3% as expected and same as the prior reading. So earlier in the morning, we didn't have any major news. And as per yesterday, we had a couple of revelations about the US economy. So first things first, the ADP non-farm employment change, which is a report that comes from a private company called Automatic Data Processing, showed that the US private sector businesses basically cut 32,000 jobs in the month of November. And this was compared to the expectation that the private sector would have created 5,000 jobs. So clearly, a big show of weakness in the US labor market. And of course, the prior reading was 47,000 jobs in the month of October, which was revised higher from 42,000 jobs. So that showed some further weakness in the US labor market, which increased the likelihood that the Fed will be hiking interest rates on the 10th of December. So we also had the services data, that is services PMI, which shows the health of the services sector. And in this case, there was an improvement from 52.4 to 52.6, showing that the US services sector is currently very healthy in expansionary territory. And this was better than the expected 52.0. So later on, we had the EIA, crude oil inventories. They showed that there was a huge draw from the US crude oil stocks, where in the previous reading there was an increase of 2.8 million barrels, but then we expected a 1.9 million draw, but what we got is a slight increase of 0.6 million barrels, showing that oil inventory is increasing, but not at the same rate as the prior week, and of course better than the expected draw of negative 1.9 million. So today, going forward, we'll be having quite a number of data points. First, there will be retail sales from the Eurozone, which are expected to have no change compared to the prior month. In the prior reading, it was a negative 0.1%, which means that retail sales were reducing in that month. Then we'll be looking at the US Challenger job cuts, which is a measure of the number of jobs created, number of jobs cut, or the number of people fired within the last month, within the last year compared to this year compared to last year. This is year over year. So in the prior reading, there was a spike of 175.3%. So we'll be looking to see deeper into what's happening into the US job market. So on top of the labor reports, we'll be getting the weekly unemployment claims, which are expected to slightly increase from 216,000 to 219,000. That is for the past 1 week. Then we get the Canada's IV PMI report, which is expected to show an increase in the purchasing managers index from 52.4 to 53.6. And lastly, we get natural gas storage report from the US. So there will be two speeches, one from MPC member Mann representing the UK at 3:45 p.m. and one from Federal Open Market Committee, Member Bauman, who will be speaking at 8 p.m. So we know that from the last speech by Trump, he has already nominated one guy to replace the current Fed Chair, Jerome Powell, which creates confidence that Trump will be achieving his goal of having influence in the Fed, which is in his direction likely to lead into lower interest rates next year. So other than that, tomorrow is the big day. We'll be getting the Canada's employment change report as well as the unemployment rate. And we'll also be getting the Fed's favorite measure of inflation, which is the core PCE price index. And of course, the preliminary University of Michigan Consumer Sentiment Survey and inflation expectation survey. So the calendar seems quite thin for today. So what else is happening in these markets? So I'll be starting with one report, as per the title of today's presentation says. So the Bank of Japan faces a policy dilemma as government bond yields keep hitting new highs. So today, the yield on the benchmark 10-year Japanese government bonds hit a high of 1.917%, surging to their strongest level since 2007. So if the Bank of Japan sticks with its policy of raising rates, it risks sending yields higher. So if it cuts or keeps rates steady to support growth, inflation could accelerate further. So this shows that the Bank of Japan is caught between a rock and a hard place. So the rock on one side is that inflation is rising and that inflation needs to be controlled. And the usual way of central banks addressing rising inflation is by hiking interest rates. So in this case, the Bank of Japan is really considering hiking interest rates in the month of December to control inflation. But then the hard place in this case is the Japanese government bonds, which represent the level of borrowing of the Japanese government, which is of course over 240% of the GDP. And if yields keep rising, then the interest on debt also keeps rising, and that becomes something very heavy for the Bank of Japan. So the yield on the 10-year bond is at 1.917%. So if the Bank of Japan hikes interest rates, then that means the yields could go higher, and as a result, raise the interest on debt, which would be a very huge negative for the Japanese government. So clearly, the government has to take a side, and so far they are considering inflation as a much bigger problem. So Japan's central bank is caught in a bind as soaring government bond yields risk upending its policy normalization process. The Bank of Japan faces a stark choice: sticking with its policy of raising rates and risking even higher yields and further slowing an already sagging economy, or holding or even cutting rates to support growth that could accelerate inflation further. Japanese government bonds have been scaling new peaks over the past month. On Thursday, yield on the 10-year JGBs hit 1.917, surging to their strongest level since 2007. The 20-year JGB yield reached 2.936%, a level not seen since 1999, while the 30-year bond hit a high of 3.436%, and this is according to LSEG data. So clearly, you can see the strong rally in Japanese government bond yields. For the 10-year, it's at 1.936, and this is a big risk because for a government that has so much borrowing, then this means one thing: an increase in interest rates would raise the interest on existing debt, as well as future debt, and that basically means a much bigger burden for the Japanese government. So Japan abandoned its yield curve control program in March 2024, under which benchmark 10-year bond yields were capped at around 1%. So as part of its policy normalization, that also saw the country end the world's last negative interest rate regime. Now, as the country weighs increasing rates at a time when inflation has been rising, it has stayed above the BOJ's 2% target for 43 months straight. The specter of bond yields spiking further looms large. So if the BOJ reverts back to quantitative easing and yield curve control to cap bond yields, the yen may also weaken and feed imported inflation, which is already a big problem. So rising bond yields means higher borrowing costs for Japan, further straining the country's fiscal situation. Asia's second largest economy already boasts of the world's highest debt to GDP ratio, standing at almost to 30%, according to data from the IMF. So add to that a government that is poised to unleash its largest stimulus package since the pandemic to curb the cost of living and prop up the struggling Japanese economy, and the concerns around Japan's ballooning debt become even more stark. So according to Magdalene Teo from Julius Baer, the new debt issuance of 11.7 trillion yen to finance Prime Minister Sanae Takaichi's supplementary budget of 1.7 times is 1.7 times larger than that issued under the predecessor Shigeru Ishiba in 2024. So this highlights the difficulty the government faces in balancing economic stimulus initiatives with maintaining fiscal sustainability, Teo said. So on global implications of the same, in August 2024, an unwinding of the yen-funded leverage carry trades due to a hawkish BOJ rate hike and disappointing macro data from the US saw stocks globally sell off, with Japan's Nikkei crashing 12.4% to record its worst day since 1987. So the carry trade refers to borrowing in a currency with lower interest rates and investing in high-yielding assets, with the Japanese yen being the predominant currency for funding such trades, as the country had a negative interest rates policy. So now rising Japanese yields have narrowed the rate differential, fueling concerns about another round of carry trade unwind and repatriation of funds into Japan. However, experts say that a repeat of the 2024 meltdown is unlikely. From a global perspective, the narrowing Japan-US yield gap reduces the appeal of yen-funded carry trades, but we do not expect a repeat of the 2024 systemic unwind. Instead, anticipate episodic volatility and selective deleveraging, particularly if yen strength accelerates funding costs, said Masai Kolu from State Street Investment Management. Lu attributes said structural force driven by retail allocations from pension funds, life insurance, and NISA, anchor foreign holdings, making large-scale repatriation unlikely. So clearly, as you can see, we expect the continued decline in hedging cost. As a result of further Fed rate cuts, we also likely encourage Japanese investors to take more foreign bond exposure. So that remains a key highlight. Update from Livestock this morning said Bank of Japan is likely to raise rates in December, and government is expected to tolerate the move. So everywhere you look is news about the Bank of Japan. You go to Yahoo Finance, it's the same thing. BOJ likely to raise rates in December. Government to tolerate moves, so they say. Also, one more article here. Ueda essentially pre-announced a December rate hike in a speech on Monday, saying the Bank of Japan would consider the pros and cons of such a move this month. The comments, which led markets to price in an 80% chance of a December hike, got little pushback from the administration of Takaichi, who has historically advocated loose monetary policy. Instead, the finance minister, Sasuke Katayama, said on Tuesday she saw no problem with Ueda's comments, a sign the government would get in the way of the rate hike this month. Even Takaichi's refreshionist aides gave guarded consent, including government panel member Toshihiro Nagahama, who said the premier may accept a December hike if the yen stayed weak. So the BOJ will have to raise rates if the yen's weakness persists, even after next week's US monetary policy decision, he told Reuters when he asked about Ueda's speech on Monday. So the next hike would bring the BOJ's policy rate to 0.75%, a level unseen in 3 decades, in another step by Ueda in removing remnants of his predecessor's radical stimulus. So, on other news, stock market today, Dow, SP 500, Nasdaq futures mixed with Fed rate cut bets nearly cemented. So US stock futures were a mixed bag Thursday morning as Wall Street built on expectations that the Federal Reserve would deliver a December rate cut. Contracts linked to the Dow Jones Industrial Average inched up about 0.1%. SP 500 hovered just below the flat line, while Nasdaq futures ticked 0.1% lower. So in extended trading, following earnings results from Salesforce, the company popularly known for its CRM product, jumped as much as 5% after issuing revenue outlook that topped analyst expectations. Discount retailer Five Below added around 2% following a strong quarterly report, despite announcing a partnership with Anthropic. Snowflake stock plunged over 7% after the AI data cloud provider reported earnings losses. So as Q3 earnings reports reached the end of the season, HP, Dollar General, and DocuSign highlight the releases for Thursday. So we might see some volatility today from HP stock, Dollar General, and DocuSign. So investors are also monitoring potential changes to tariff policy. The Supreme Court is still in the process of deciding whether Trump acted legally in his use of emergency powers to enact his most sweeping duties. So that is it from the update on the Yahoo Finance side. And now looking at how Asian markets have performed as of this morning, one key thing can be noted. While the S&P ASX 200, that's the Australian benchmark index, is up 0.27%, the Nikkei 225 index takes the key highlight for the day, since it's already up 2.38%. So the rest of the Asian indices are slightly up, but none matches the Nikkei 225 index in gain today. So Hang Seng index is up 0.68%. The Nifty 50 is up 0.14%. FTSE China A50 0.89%. IDX Composite 0.14%. While the KLCI is down 0.35%, CSE all shares 0% change. The KOSPI is down 0.19%, and the SET is slightly up with a 0.03% gain. So one article I found trying to explain away the gains from this morning. Most Asian stock markets were largely subdued on Thursday, tracking modest gains on Wall Street amid expectations of a Fed rate cut, while Japanese shares rose sharply with gains in tech as well as chip makers. So major Wall Street indices edged higher overnight, while futures tied to them traded largely unchanged in Asia hours on Thursday. So Fed easing bets firm, Nikkei jumps. Market sentiment was underpinned by firm bets on a Fed rate reduction next week, following weaker than expected US economic data. The ADP private payrolls report showed a slowdown in hiring, while the ISM services index indicated softer activity in the services sector. So traders are pricing in roughly a 90% of 25 basis point rate cut on December 10, according to the CME FedWatch tool. So investors now await Friday's personal consumption expenditures inflation report, which could further influence expectations for Fed policy. So despite the cautious tone elsewhere, Japanese shares backed the regional trend with the Nikkei 225 index and topics jumping, as you have seen, over 2% for the Nikkei 225 index, led by the tech and semiconductor stocks. Elsewhere in the region, markets remain more muted as investors continue to monitor regional growth signals and geopolitical developments which could affect risk appetite. So concerns over US fiscal policy and leadership changes at the Fed next year also weighed on sentiment, with some key data missing due to earlier government shutdown disruptions. Investors remain focused and cautious until the economic picture becomes clearer. So outside of that, as you have seen from the Fed CME Fed Watch tool, there is already an 89.2% probability that the Fed will be cutting on the 10th of December. And what this means is something we have been talking about for a while, that normally when you expect a rate cut, a week before that, you'll see the currency weakening. But then on the announcement, we have seen the market do the exact opposite. So on the rate cut day, you get to see the currency strengthening and doing the exact opposite of what you would expect. So the same case applies to the dollar, and we have been seeing the weakness in the dollar so far this week. So if you check the betting markets on Kalshi, this is predictive markets in the US. The participants are already pricing in a 94% probability that the Fed will cut rates by 25 basis points. So I tend to take calcium even more seriously because these are people who have staked their money on the bet. So far, over $20 million in the bet. So the chances of the Fed maintaining rate is 7%, and for a rate cut is only 2%. So clearly, you can see the green line here, and just about 2 weeks ago, it had gone all the way down to 25%. So 2 weeks ago, there was a 25% probability of the Fed cutting rates, and now we are basically looking at a market that is pricing in a 93% probability, 94% probability for a rate cut on the 10th, which is about 6 days from today. So on other news, looking at financial news, need to know market risk. About 350 stocks in the SP 500 climbed despite the weakness in most mega caps. So Microsoft paired losses after saying aggregate sales quotas for AI products haven't been reduced. So Microsoft has not lowered sales quotas for salespeople. CNBC cites email statement from Microsoft on sales quotas from Microsoft. So Microsoft lowers AI software sales quotas, and this is from the information. So what is basically happening here is that yesterday before market open, news website called The Information released an article saying that Microsoft had lowered its AI software sales quotas. So a few hours later, on Microsoft learning this and the stock had already plummeted, Microsoft did an email and they said that they have not lowered sales quotas for salespeople, especially the salespeople who are mainly focused on AI products. So I hope we'll be getting further developments on this. But then after the big sell-off in equities yesterday at around 5 p.m., we saw the markets recover immediately, and there was a huge dip similar to these, and then the market got right back up. And these applied to across several stock market indices. That is the Dow, the SP 500, and the Nasdaq. But we had also seen the dip extending to gold, silver, as well as Bitcoin. So far today, if you look at the currencies markets, for the week, the Australian dollar is the biggest gainer, followed by the pound, New Zealand dollar, yen, euro, then Swiss franc, Canadian dollar, and the US dollar being the weakest, as we expect a rate cut next week. So on the day, the strongest currency seems to be the Australian dollar, which is up 0.2%. The yen is also up 0.2% against the USD, and as the weakest currency is the Swiss franc, which is down by 0.13%. So on the stock market, that is the SP 500, you can see that Microsoft ended the day down 2.5%. So the tech sector generally was not doing well, but then the rest of the sectors were really doing well, with companies such as United Health Group gaining by 4.67%. We also had Palantir gaining 3.16%. Banking sector, you can see Morgan Stanley up 2.74%, Goldman Sachs, Schwab's, Robinhood, all being up. And for Robinhood, given that we had seen a very strong recovery in the crypto market sector, the stock gained by 6.11%. So also Tesla was on the rise again, being up 4.08%. So I remember some time back when Tesla was down on the year. At some point in March, it was down over 50%. Then later on, for those who listen to the Bullish Banter podcast, we talked about Tesla potentially gaining by 20% on the year. So if you look at the year-to-date performance, came in from a negative territory. So the low that we saw on March was $222. Today it's trading at $446.74, more than 100% gain from the March low. But then compared to the open of the year, what we saw was Tesla dropping over 50%, gaining over 100%, and now compared to the open of the year, the stock is up 17.79%, which is likely to hit over 20% by the time we end the year. So that is it from the macro and news side. And now I believe we can jump straight into some technical analysis and try to understand where the markets might be headed next. So I'm checking the comment section. Good morning, Kiamamuturi. Good morning. There's a request to check on Euro USD and USDN. We'll be doing that right away. Limo KV, good morning. Zefden, good morning. Can see Simon Gitonga, Rijomboy, Knight. Hello to you too. Good question. What's your projection on BTC and ETH? We'll be checking on that too. I don't know what period or time frame you're asking for. Is it projection for today, for next week, for the end of the year? Which one is it? Good morning. Kindly discuss how PCE data, depending on the figures released, will impact the SP 500 and the Nasdaq tomorrow. Thank you for that. I'll be commenting on that. So let's begin with the currencies, because that's the first request we had on the comment section here, though it was always on plan. Just give me a sec. All right. So check on the currency side. We begin with the dollar index. You can see we had a bit of a sell-off here on Tuesday. Wednesday, an acceleration lower, and today it seems like a continuation of the same. So clearly, very weak dollar index. And from the pound USD side, I remember last week we identified the potential breakout here. That was 2 weeks ago. Last week's, then we got into this sideways momentum. Eventually, we projected a bounce here on Tuesday. So on Wednesday, this is when we had the strongest bullish momentum in pound USD. And today we had a pullback, and now what looks like a continuation. So we had marked this area here. You can see the area highlighted in yellow as a clear support area, which could turn into a resistance here. So from what we are looking at here on the H1, and now if I zoom here, the market broke that area, retested, and is now looking like a continuation. So the next target is not very far off. So if you go to the 4-hour time frame, there was a key level resistance area here. So it might not have a lot of room for bullish momentum, but clearly it could be moving way higher than 1.33683 price level. And this is based on the weakness we are seeing in the dollar. So as for Euro USD, this seems to be the cleanest, given that you've just broken past a key level resistance. So we also got the same kind of price action, a breakout yesterday, a pullback today, and now a continuation. So from the 4-hour chart, it seems likely that the Euro USD could push for a new high. This would be around 1.17280 following the breakout of this particular trend line. So for AUD USD, we are seeing a very strong bullish momentum on the week. having broken out of this particular trend line. And now we are testing a set of key level resistance areas where the market initially was unable to break, and now it's being retested again. So potential push higher to 0.66286, this area here. We have USD JPY, where the yen is really strengthening and still playing within the channel. So this morning we have had a very sharp drop, and this drop could potentially extend to this lower trend line. So potentially moving even further downwards towards this area here, around the 154.0 price action area. So with what's happening with the yen and expected stimulus package, investors dumping their bonds, then the yen is strengthening based on the opposite, where the biggest news in the market right now is that the government is willing to stomach the challenges of a rate hike in December, and that rate hike is expected to strengthen the yen. So clearly a potential push to 154. So this particular trend line was a major support area, and since it was broken, then a retest here, we are seeing a technical move to potentially reach 154 price level. So dollar Swiss franc is playing as we had anticipated on Tuesday. Wednesday, we completed the path, but then an attempt to bounce earlier this morning is being met with more strength in the Swiss franc. So we are still on the downwards path. Remember, Swiss franc has been the currency of the year, very strong since the year started. So potentially we could be seeing a further push to the lower trend line around 0.79583. And then I think we have covered most of the majors. The Nikkei 225 index having traded in this channel in some form of pullback. So from the daily time frame, you can see the price action since January this year. So January was right here. So we had a sharp sell-off. This was during the Trump announcement of tariffs. Markets recovered very quick within a month, and so far we have been on a very strong bullish momentum. So last month, that is November, we had this pullback. It was pretty huge, and after that pullback, this month we are seeing signs of recovery. So if you go to the 4-hour time frame, you'd notice that the pullback that we saw last month was following a familiar path. So if that was our resistance area and our support was following this path, then the breakout happened about a week ago. So after we got the breakout, we got a retest, and now we are looking at a continuation. And the continuation was strongest as of this morning. And now we are seeing some form of pullback playing out. So good chance that we see the market pulling back to either of these two areas. So on one side, we have this area here. And on this other side, we have last week's high. So last week's high was pretty important. So good chance that we see the market dipping into either of these two. So with such a dip, you expect the market to retest, but still continue in the direction of the breakout. So still expecting very strong bullish momentum from this index. So for the UK 100 index, yes, we've had this sideways momentum for 4 consecutive days, today being the 5th. And now we are seeing some momentum coming in, but we are yet to see a formal breakout. So there's no breakout yet. So we have some resistance here. We have some support here. And the market hasn't broken out yet. But then if we happen to see a breakout here, then that would mean an acceleration down to 9,393. Else we remain within the channel. So the Hang Seng index attempted to break towards the upper side and failed. And now what we are seeing is the market getting right back to formation, riding all the way back to the support of the range, and now bouncing from there, which means that now we are likely to just get back up to the upper trend line here. So on your favorite metals, the precious metals, gold and silver, we had this 4 cup and a handle playing out here on gold. Almost completed yesterday before dropping sharply at the New York Open. So the sharp drop happened around here and then extended further this morning, indicating some form of weakness in the trend. So yes, there's a strong bullish momentum trend. So if you look at the daily time frame, this is a market that has already been moving higher. But then if you look at the last 2 days, they have been red. Today being the third day, still in the red. So from the 15 minutes chart, it seems likely that gold is looking to retest this area here at 41.64, which is a key level support that marked the low on Tuesday. So clearly, very quick push to this level could be playing out. Perhaps the favorite chart of the day would be looking at very quick shots on gold. Silver is doing kind of the same thing. Yesterday we had this cup and handle formation. We expected a breakout and continuation. That didn't play out. Yesterday at the New York Open, there was a sharp drop, and then the market extended the drop today. And now we are looking at a key level here in the cup and handle formation. So very quick shots on silver, targeting a very short-term price target at $56.403 per ounce of silver. So oil has really struggled to get on the upper trend line. The upper trend line has been right here. So despite the current move we have seen over last week and this week, it has really struggled to get on that upper trend line. So yes, we are in what looks like some form of triangle or consolidation. And as you can see, the price action has been a bit chaotic. 2 days of bearish momentum, yesterday bullish and then bearish. And then today you can see an attempt to move down and then moving up. But we remain with this within this triangle. So patience until we see a breakout outside this particular triangle on H1. So the US30 has been trading sideways since the market opened. It's the story of our life. It's the same patterns we have been seeing over and over. Sideways momentum and then eventually a breakout and a directional move. So if we happen to see a sharp break on the lower side, then perhaps we should be looking at some of these levels. So for instance, a break towards the lower side would likely lead to a sharp drop to 47,751. UT100, that is the Nasdaq, was in a sideways momentum. Yesterday, as I mentioned during the Microsoft news, there was a sharp drop. And then once the Microsoft clarified things that they have not cut sales quotas, the stock market returned to the same level and has remained on that range for a while. So we are still in some form of sideways momentum on the Nasdaq. So we'll be waiting for an eventual breakout later today. So SP500 also had the same kind of price action yesterday. A sharp drop, immediately recovered and is now still moving sideways. So clearly we'll be waiting for more bullish momentum, perhaps in the New York session. And remember, we are still in a recovery path. So this recovery started last week, and this week has been a bit slow, but potentially we should be seeing 68.74 price action level and above. So Bitcoin remains resilient. So after the sharp drop earlier in the week, you can see how we started the week with a sharp drop. Then the market recovered and has kept on recovering. So 93,317. So clearly it's a very resilient market. So good chance that we see more upside potential with short-term targets. That is for the week being around 99 or 100K here. So you could be seeing 100K Bitcoin as early as this weekend. Remember, Bitcoin is traded 24/7 Monday to Monday. Bitcoin market doesn't close. So for New Zealand USD, more bullish momentum after breaking the particular trend line here. So clearly, as we anticipate a Fed rate cut, we could be seeing a 0.58 price action level for New Zealand USD. So more bullish upside potential. So despite the sideways momentum we are seeing as of this morning, we could be seeing more upside later in the day. So the German 40 index, or the DAX, completed our projections on Tuesday as of this morning. And now we should be watching this resistance area closely, because a break outside that would likely mean that we are going for the full-on recovery in the DAX. So the EU 50 is almost completing, almost got there, slightly there, which is a key level resistance here. And once it got to that area, you can see the attempt dropped. But it's a bit of a mixed activity here. If you go further down to a 5 minutes chart, it's drop, price, drop, price, drop, and shows the indecision in the market. But overall, we know we are continuing with the last week's recovery path, and a new all-time high is not very far off. So preparations for next week should be in order, looking to take advantage of the push to a new high. The new prior high was 58.16. So clearly, it's a market that is looking to reclaim a new high. The France 40 index remains subdued in what look like sideways momentum. So what we are looking at here is a market that I would say for the last 4 or 5 sessions has been on average moving sideways. So the Swiss stock market index from the H1, H4, and D1 shows very strong resilience, though a bit noisy. What we are looking at is a potential move into a new all-time high. The previous high is so close and nearby. It's just around here. So one more push, we could be getting into new highs. And from the 4-hour time frame, what we are looking at is a market retesting a key level resistance. So we are currently testing the upper trend line. So if I zoom out, this seems like the likely path, and the market seems pretty persistent on getting into newer highs. So for USD CAD, if you go to the 4-hour time frame, what we are looking at is a market that is currently testing a key level support, which was last week's low. So after testing last week's low, sorry for that, we saw a bounce as of this morning. So it seems like the dollar is only strong against the Canadian dollar, but against other currencies, it seems to be very weak. But that might not be sustained for long. Then for pound yen, we projected this on Tuesday. I remember there was someone who requested we analyze this, and we projected we would get a rally to this area here, which was completed the following day on Wednesday. But then upon hitting a key level resistance, now we are seeing the exact opposite, that after the market hit this area, now we are seeing the market moving in the opposite direction, which means we are likely to go back to the same support of 205.326. So that is it for the day. Thank you very much, guys. I remember there was one question I had not answered. So for the PCE data, if inflation is on the rise, that might complicate the math a bit for the Fed, especially given that the Fed is looking to cut interest rates further. But then if inflation is on the drop, then that will be making the Fed job easier for going for a rate cut in December. And if the job is easier going for a rate cut in December, then that should be positive for US equities and negative for the US dollar. The opposite is also true. So if we see inflation on the rise again, the dollar could get some more breathing room. So one last question: how do we analyze the Asian high and low? It has been a trend that we have been observing, especially on US equity indices. So commonly, the Nasdaq. So sometimes the market will revisit the Asian high and low, and not always. Um, I don't know if we have an example here. Um, no, not yet. The market conditions have a bit changed from what we had in the third quarter. So normally, there has been this theory which was playing out quite well earlier in the year, where if you're trading, let's say the Nasdaq, the market would likely revisit the Asian high or low during the New York Open, and then after that, it would trade in the opposite direction. So far, that theory has been broken for the Nasdaq. I don't know if it's still playing out in gold. Yes. So notice how yesterday the Asian high was this one, and then the Asian low was this area here. So the market goes up all the way, visits the Asian high. This is during the London session. And as we enter the New York session, the market changes direction completely and revisits the Asian low. So yes, you can see after the Asian high and low are set, gold revisited both high and low within the same session. So for the prior day, there was this sharp sell-off here during the Asian first session, that is Sydney. Then the market went back up. So here we got the London low. Then during the New York session, gold revisited the Asian high and then went straight back into forming a new low for the day. So that has been a theme, especially in the Nasdaq, but now it's broken. But for gold, it seems to be playing out. So if gold was to pump at some point and let's say make a bullish momentum for the day, then the target would most likely be the Asian session high at 42.17. But for now, we are looking at Tuesday's low, and Tuesday's low is 41.64, which is a likely outcome of the extension of this bearish momentum. So that is it for the day. Remember, if you don't have a trading account, you can register for free using the links in the description below. And if you're watching this on X, visit FXPesa.com website, register for a trading account. You can also visit FXPesa official on X, check the link in bio, and then register for a trading account. For classes from any of our social media handles at FXPesa, you can check the link in bio. You'll get our free Zoom classes that run every day from Monday to Friday. And also, we have a free course on YouTube called The Novice to Pro by Rufus Kamau. Make sure to check it out. And new episodes of the Bullish Banter podcast are coming in, so make sure to check them out too. And lastly, for continuing this conversation on Telegram, make sure to join the Bullish Banter Telegram community. I'll be dropping a link in the comment section. I'll also be dropping the same on X. So make sure to join and participate. That is all for today. Enjoy the rest of your trading day, and I wish you a profitable day.